Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and today I am going to be talking about the S&P 500 Composite Index. So right now, the S&P 500 on the single trading session has tried to pierce right above that previous trend line area, right around there. It hasn't been able to really hold and sustain above that area. It did pull back on the session, and right now it looks like the S&P 500 is having a hard time staging a rally as the Euro US dollar continues to fall. Remember, the Euro US dollar is weighted 50% of the dollar index, and that basically implies that if the dollar index is going to have a pretty strong day on the session, that should have a very negative impact on both stocks and commodities, and the bond market should have a pretty decent bounce on the session. So, all things considered, in this type of market environment, some of the better investments are more likely to be the non-cyclical assets, and I'll be talking about another one pretty soon on my channel. But not only will the non-cyclicals perform very well, I'm also thinking bonds, and depending on which type of bond you buy, those bond notes will do fine as well. Perhaps corporate bonds and also uh, treasury bonds. Treasury bonds will continue this upward trend. So as long as these issues continue to reemerge in Europe. That being said, people are saying that the bailout for Spain was done on pretty good conditions. However, we're not too certain about what's going to happen out of Europe at this point, because the whole entire point was to prevent us from getting to this point where we would have to bail out countries that have uh, budgets the size of 50 different countries combined. Um, Bailing out Spain is not going to be a very cheap process, and it's going to require a lot of European inflation. That means everything from the central bank interest rate falling down to 0.10%, from the European Central Bank also doing asset repurchase programs on a much larger scale. So all of this is going to be extremely inflationary for the European Economic Zone, and there's no guarantee that it will succeed. However, if they don't go off and do something of massive scale, of massive proportion, then it's going to signal to the market that they're not going to commit enough resources, and that Spain will reemerge as an issue again and again and again, like what has happened with Greece. So again, that's a problem. So what is really going to come down is an inflationary monetary and fiscal policy is going to take place in Europe eventually. Once that happens, which it's already happening, you're going to see the Euro US dollar weaken as a currency against a basket of all other currencies. And third of all, some countries may actually default depending on how fast the European Union is willing to react and correct a lot of the fiscal imbalances that are going on in Europe currently. So again, this is just what I think personally. I think fiscal policy is probably important, but monetary policy will really stick out and be a sticking stone as to whether or not investors will be really confident in what's going on in Europe. But right now, this market does not signal any confidence. It in fact seems like everybody is anticipating another round of bailouts for Spain pretty soon. And if this issue continues to reemerge like what we saw with Greece, it's only going to add to the chaos, the pain, and perhaps we're probably going to see much more suffering in the marketplace soon. So that does it for me for today. I think stocks are still weak. I still believe that you guys should buy safer assets and you should short the weaker companies. Also, bonds, you should be very selective. I would avoid European bonds, and I think the European crisis is still going on, and I also believe the Euro US dollar will continue to weaken as the dollar strengthens. Take care, folks. You have a wonderful trading session.